The IRS has warned us to plan on much smaller tax returns this year due to significant changes in the 2022 tax code. A lot of 2020 and 2021 special provisions have expired, and unless you know about these changes, you run the risk of a really rude awakening, especially if you're expecting a similar return this year. Hi, and welcome back to Stop Being Sold. My name is Michelle, and I'm here with Brian. And in this video, we're discussing three of the main reasons why the IRS says that you should expect a smaller tax return this year. And you want to make sure you pay really close attention to number two because it is going to have the largest impact on tax refunds for 2023.
Yeah, exactly. The average refund for people filing 2021 taxes was $3,176 as of October of 28. But it was up nearly 14% from $2,791 in 2020. This is all according to the IRS.
Sure.
But as you said, they've warned us to expect smaller returns this filing season due to these key changes.
All right. So the first change that's going to impact returns is that there are no additional stimulus payments to lessen the
Yes.
taxes.
Yeah, that's correct. The IRS recently put out a release news that states, and I quote, taxpayers will not receive an additional stimulus payment with a 2023 tax refund because there were no economic impact payments for 2022. Makes
No
sense,
more
right?
helicopter money, huh?
No, that's what they said. No more stimulus payments. So no additional tax refund. So, but think about this. Stimulus payments began during the pandemic and
Right.
started with the CARES Act of 2020. Individuals, Michelle, were getting $1,200 per adult and $500 per child under the age of 17.
Right.
Then in late 2020, an additional $600 per adult and child was given under the age of 17. And then it continued with the American Rescue Plan in 2021 with $1,400 per adult and child during that time frame.
Yeah.
So, and here's how it affected tax returns during the years. Think about it. If you didn't receive your stimulus during the year it was given, it was added to your tax refund the following year. That accelerated the returns, right? And since there was no stimulus payments in 2022, IRS is basically saying there's going to be none included with the 2023 tax refunds.
All right, so let's move on to the second reason that people should expect a lower refund amount is that the child tax credit, which is the largest tax break for many families, has been reduced.
This is the big one. The child tax credit, Michelle, has been reduced back to the 2020 level of $2,000 per child under the age of 17. Think about this. During 2021, the child tax credit rose to $3,600 per child under the age of 6 and $3,000 for children ages 6 to 17. So think about this. For a family of 4 with 2 children under the age of 6 could see a $3,200 less credit on their taxes this year.
Right.
This is huge. And part of this originally part of this credit was paid out in installments. Remember how they used to do so much per month?
Mm-hmm.
Well, however, in 22, this has all changed. So none of it was paid out early.
Oh boy. All right. So let's talk now about the third change, which is the child independent care credit.
Yeah, this one changed a lot and is back to the pre-pandemic levels also. Okay. This credit applies to people who have someone that they take care of, their children or a dependent with disabilities in their household while you work. This credit, Michelle, gives back a portion of this money you spend on care and can reduce your tax bill by hundreds or even thousands of dollars. It was a huge, huge plan. The American Rescue Plan, though, increased the amount of eligible expense for this credit, relaxed, and it also relaxed the credit reduction due to income levels, and it made the credit fully refundable. That was
but this is all gone now.
Yes, this is all gone for 2022 taxes. And here's where we are today. For 2022, the credit for child independent care expenses is non-refundable, and you may claim the credit on your qualifying employment-related expenses up to $3,000 if you had one qualifying person, or $6,000 if you had 2 or more qualifying persons. The maximum credit, though, is 35% of your employment-related expenses.
All right. Well, there you have it. The 3 critical changes that are going to impact tax returns this year. Brian, do you have anything else you want to add?
Yeah, don't forget that this year tax filing deadline is Tuesday, April 18th, unless you file an extension.
All right. There you go. All right. Here's the deal. We're going to put a video below in the description and in the pinned comment on how the Secure Act is going to change your retirement. Check that out. Again, we're putting out these videos so that you can be able to plan for it, that you are able to plan for taxes, which is, how
Huge.
you keep, it's not always what you earn, it's what you keep. So go check
Exactly.
that out. Don't forget to like, subscribe to this channel. Thanks, Brian, for today. And thanks everyone who watched.
Thanks, everyone. Have a great day.